Hello everyone, this is Tony again, and I'm doing this recording to show you the strategy workflow for the weekly inverted fair value gap, or iFVG, with weekly level sweeps executed in H4 timeframe. So let's get right into it. Um, I think what we can do today is pick out an asset that most of you are interested in trading. So I hear a lot of gold traders in the group. So let's look into gold and how we trade using the weekly iFVG uh, sweeps with the H4 execution time frame. Okay, so a couple of things before you get started. Make sure that you have these two time frames in your MetaTrader or TradingView. We're using weekly time frame and the H4 time frame. Okay, weekly is for your bias, macro, and H4 is for your execution. This is a swing trade strategy. In essence, you will not be exiting trades soon. You'll expect to hold trades anywhere from a few days to a week or even a month. Okay, but let me show you so that you'll be able to realize that it is actually worth it. Okay, next, the indicators that you need would be the MACD. Special settings, please take a look. The settings will be 6, 13, and 4. Double-clicking this one, I'd like you to see that the fast EMA is 6, slow EMA is 13, MACD SMA is 4. Okay, next one is your RSI. RSI would be your usual 14, but of course plotted on the weekly time frame. Okay, so the first thing that you need to do, the weekly bias that you need to look for would be if you were going to take longs or if you're bullish. Okay, you're only going bullish if your MACD is above 0. Okay, MACD above 0. So as you can see, we have a 0 line right here. If your MACD histogram is above 0, or you have this positive histogram, you're only looking for longs. If it is below 0, then you're only looking for shorts. In the same way, if your RSI is above 50 level, you're only looking for longs. If your RSI is below 50, then you're only looking for shorts. We're not looking for overbought or oversold positions. We are simply interested in which side of the market is stronger. Okay, now let's begin. So one of the first few things that you need to be looking for, since this is called weekly IFVG with weekly sweeps, would be a weekly sweep. Okay, so I took the weekly sweep trade right here on the week of July 20th, but I got some profits and then got stopped out right here. So let's approach this new opportunity right here. As you can see, this candle right here, okay, is reaching out towards the low of this previous weekly candle, okay? And as you can see, our weekly histogram in MACD is still bullish, and RSI 14, we're above 50, we're still bullish. So we're only looking for longs, okay? So I've already marked out right here that sweep, okay? So we're looking back, so this is more like back testing and showing you how it works, okay? So what we need to do next, when you have price reach for the weekly low of the previous week or the previous weekly low, what you want to do is drop down to H4. Now, you don't need to wait for it to and stare at your charts all day or all week. All you need to do is just set an alarm so that when price reaches this previous weekly low level, then you can come to your charts, okay? So easy, click on right, click on trading, and set an alert. When your MetaTrader 5 alerts, then you can get right on your desktop, okay? So at this point, we have reached this previous weekly low. We drop down to H4, okay? And from H4, we're going to look for that line that we drew. Okay, it's right here. So that line right here, let me make that larger for everybody to see. So what are we looking for in H4? What we're looking for in H4 would be a single bearish fair value gap that would deliver price into this previous weekly level low, this line, and sweep it, okay? So we have a bearish fair value gap right here, okay? It touched this, yes, but it didn't go through it. We want it to go through this line. So this is not the one we're looking for, but this is the one we're looking for right here. So a single bearish fair value gap in one leg. So this is one leg, then a move up, then another leg, okay? So this is what we want. This fair value gap right here has been respected, and after mitigating that, price continued to move lower. So this is not the one. So this one right here, what we're looking for, once we have this single H4 fair value gap that supposedly would be sweeping, we're expecting a sweep. We want the price to invert this gap, meaning closing above this gap right here, this premium price. Okay, and we can see that price has actually inverted this fair value gap, this single bearish fair value gap, and price is actually closed above it. Okay, so this is an inversion. Now, do we enter yet? Well, some of you will, but I'd like to be on the safer side. I'd like to see the H4 MACD turn positive right here. As you can see, the H4 MACD has turned positive after the close of this candle. And then you can also see that your H4 RSI is also above 50, showing strength that the bulls are in control. So we will take a long at this level right here. Okay, so your long will be from this candle right here, and your stops will be, okay, let me show you, the stop will be below this level right here. Okay, so let me put that stop below this level. Okay, and this is where you enter. So once you enter, you will be able to see, okay, this is your entry. Your stops will be equivalent to about 1.02. Okay, so you enter right there at this level. So let me mark that entry also. Okay, right here. So that's our entry right there. Okay, so what do? The first target, because you'll be splicing your position into two, TP1 and TP2. Okay, so TP1, you're targeting the previous week's high. Okay, so where's that previous week's high? If we go back to the weekly time frame, okay, you'll be able to see, okay, right here. Once that entry is there, this will be your previous week's high. Okay, right there. That's your previous week's high. So let's go back to our 4-hour time frame. Okay, there you go. So once you enter right there, here, okay, there's your entry. There's your stop loss, around 1.12%. Okay, 1.12% right there. But this should be about 1% of your total account balance. And your first target would be at around 1.80. So that's over 1:1 risk to reward ratio. Okay. So where is that reach? Right there. Okay, it's reach at this point right here. So let me mark that. Okay, so here's what you need to do. After your entry, you already have your stop loss. You mark your take profit at this level right here. Once your first take profit is already reached, what do you need to do? Okay, what you need to do is go back to your weekly time frame. Okay, go back to your weekly time frame and wait for this weekly candle to close. Okay, wait for that weekly candle to close. Okay, next, once this weekly candle closes, you now have the chance to move your stop loss, okay, to break even or below the low of this entry. Okay, so remember, this is our entry. Okay, this is our entry, and this is our stop loss right here. We can now move it to below that current weekly candle. Now, after that, remember, you've already taken profit, the first take profit, okay? So you let it run. After this next candle, this next weekly candle closes, what you want to do is move your stop loss below the low of that weekly candle. Next, after this weekly candle closes, you want to move your stop loss below that, until you get the point, okay? Until you get stopped out, and you get stopped out right here. Okay, so this would have given you from the entry point all the way right there a good 19.31% return. And you all know that that's a huge return if you're trading gold. Okay, you've already marked your over 1:1, more than 1:1 risk to reward for your TP1. And all you need to do for your TP2 is just keep on following and trailing the lows of that week. Now, once you get stopped out, what do you need to do? Well, once you get stopped out, you have another opportunity, right? So all you need to do next is rinse and repeat. So once you get stopped out right here, you look for another opportunity. You mark this low right there, and you go back to your H4 and take a look at where you could potentially enter next. Okay, so that's the line. Let's minimize that a bit. Okay, so again, you're looking for a single H4 FVG. There's no single here. It's like 2 or 3 right there. Okay, here's your single FVG. Okay, that's your single FVG. Okay, and you have the inversion right here. However, this inversion is not above this sweep line right here. We need to look for an inversion below, above that sweep line. If we're going to take a long, we need that inversion above that sweep line, okay? So where can we see? Can we find another inversion? This is your inversion line right here. Okay, can we find another one? Find another one, find another one. Okay, so there is a single fair value gap right here again, right here. Okay, a single one. Okay. And then there's an inversion right here, but again, it's inverted below that line. So it's not this, but let's take a look at this. So there is a single fair value gap. There's fair value gap right here. Okay, so that's good. That's one leg. That's another one right there. And it got inverted right here above. Okay, and it's already above that sweep line. So we also have a positive MACD. We also have an RSI above 50. So your entry's right there. Entry's right here. Okay. Stop loss is below the low right there, or the low of that sweep, the lowest portion of that sweep around there. Okay, just to be on the safe side. So that would give you an entry of about 2.99. Okay, and if you go back to the weekly time frame, if that's your entry right there, okay, that means that you would want your target to be around here. Okay, so that's your first TP around that level. Okay, first TP. Okay, let's go back to H4 so we can see that TP. Okay, so your entry's right here. Stop loss is right there. Okay, and you can see that that's about 2.99. Okay, 2.99. Let's set it at a 1:1 risk to reward right here. Okay, so your take profit has been reached around this level right here. Okay, so once your TP1 is reached, you already banked on your first take profit. Go back to the weekly time frame. And what do you do next? So here's your stop loss. Remember, this is your stop loss right here. You move it to this candle right here, this candle below, okay, right here, the stop, move it below. Then when this candle moves again, move it below that weekly low, move it below that weekly low, move it below that weekly low, and move it below that weekly low until you get stopped out right here. So from entry all the way here until you get stopped out, that's another 8.13%. Okay, so that's how you swing trade using this strategy. And many would ask, okay, it would take a long time before a weekly sweep would happen again. Well, yeah, that's kind of the edge of this strategy. The edge of this strategy is to actually get you in and let you ride that trend. Okay, that's why you also trail the profits below the low of the weekly candle. And that's the opposite for short trades. Okay, one trade and a monster 19% return or 8% return. You can do this for assets like silver, US 500, US 100, US 30, UK 100, Germany 40, Japan 225, or USD JPY. Those are my recommendations. So this is for traders who are quite busy and only have time to look at their charts perhaps every 4 hours. Since you're dealing with a weekly time frame macro, then you won't be tied up to your desk. But believe me, your performance will actually change with this strategy, and it's not the number of positions that you have in the market that would make you a winner. It's the number of correct decisions that you make and riding the trend and getting in at the right time with the momentum of the market behind you. That's what's going to make you win. So I hope that this strategy would be useful to some of you with this kind of lifestyle. Again, I'm not promoting any specific kind of strategy, but I want you to look at through this strategy. And if you think this strategy resonates with you, then please feel free to use it. Again, thank you for listening, and I hope this one helps you.